Guys, we'll start the session in next 1 minute. Good morning, everyone. Welcome to today's session of Free Bell with William O'Neill India. In this session, we'll take you through Nifty 50 start placement, along with its probable opening, key global news and events, how US markets fare through the night, how Asian markets are trading at the moment, as the end start of the day for you. Without taking your much time, let's start with Nifty 50 chart analysis. If we talk about yesterday's Nifty 50 chart movement, Nifty 50 had a gap up opening yesterday, as you can see in yesterday's candle. And Nifty remained in the positive zone throughout the day. Came under some kind of profit booking at the higher end, but managed to close around 0.6 to 0.7% higher. And what's the good part is that it's been advancing for the last couple of weeks and has been trading well above its key moving averages, such as the 50 DMA or 200 DMA. Going forward, the previous highs, such as your 18100, your 18350, can act as resistance for Nifty 50 going forward. On the ONI front, if we talk about it, Nifty 50 continues to remain in confirmed uptrend, which is a really good sign that the market is trending. Looks like the market is trending higher at the moment, and the distribution day count, which is used to track the market weakness, is very low at 1. So going forward, you would like distribution day count to remain as low as possible. If distribution day count increases past 5 and 6, uh, market would be changed to uptrend under pressure. Talking about key news, Mahanagar Gas cuts PNG and CNG and PNG prices by around 6 per kg and 4 per SCM. Indoco Remedies buys 26% stake in Kanakal Wind for rupees 86.4 lakhs. Bharat Gears to consider bonus issue on 19th August. Techno Electric and Engineering Company secure orders worth rupees 1,465 crores for flue gas desulfurization from Rajasthan Rajya Vidyut Utpadan Nigam Limited, Kota and Jalwar in Rajasthan. SBI Bank started insolvency process against Bajaj Hindustan and NCNB. Until housing defaults on a term loan or 122.3 crores. Talking about the FI and DI activity yesterday, FI remained net buyers yesterday of around 1,377 crores in Indian equity, as DI sold equity worth rupees 136 crores. So talking about the global market update, if you talk about the US markets trade on a mixed front yesterday, as your Nasdaq closed around 0.2% lower, but your S&P and S&P 500 and Dow Jones closed higher by around 0.2% and 0.7% respectively. Talking about the Asian markets are taking cues from the US markets have been trading uh, on a mixed front as well, by as Shanghai Composite is trading by around 0.2% lower, Kospi by around 0.5% lower, and Nikkei is trading higher by around 0.8%. Yesterday, we were talking about the demand concern for crude oil in the medium term, and similarly, crude oil has been trading lower. And yesterday, it was trading around 94. Today, trading around $92.8 per barrel. Brent crude oil. If you talk about the US 10-year yield, it edged a little higher at 2.82%, but the 2-year 10-year is still inverted with 2-year at around 3.23. Talking about the USD INR, USD INR has appreciated a bit and it's trading at around 79.22. So talking about SGX Nifty is again indicating a mild positive opening of around 60 to 70 points. Yesterday we closed at around 17,825 and today morning SGX is trading an opening of around 17,890. Talking about the sector view, what's the good part is that your major broader market indices and your major indices are in rally at the moment. If you look at it, just the energy is under pressure, and with the D-Day count still controlled at 4, if some D-Day is expired, even the energy can come back to your the rally mode going forward. If we talk about with respect to their key moving averages such as your 50 DMA and your 200 DMA, most of the market indices are trading above their 200 DMA, and all indices are trading above the 50 DMA. The few market exceptions, if you talk about it, is your pharma and IT, and majorly your IT, where there is some demand was going out, as well as your margin concerns. That is why your Nifty IT is trading below your 200 DMA, that is stark below the 200 EMA of around 9.8%, almost 10%. And if we talk about the small caps is still yet to reclaim its 200 DMA. So let's see if in the future it's able to reclaim or not going forward. And these will be the key trackables on the sector front. If we talk about the start of the day for us is SRF. And before we go ahead about talking about the company on the fundamental or the technical front, so let me give you a small disclaimer that it's not a buy or sell recommendation, and we'll be just doing it for educational purpose. So talking about SRF, so SRF is diversified into refrigerant gases, specialty chemicals, and packaging film. Mainly, the chemical division derives around 43% of the overall revenue, followed by packaging by 39%, technical textile by 15%, etc. Now it's diversified to more than 90 plus countries, and the market constitutes to 57% of the overall revenue from the exports and rest from domestic market. Talking about your Q1 FY23 results, top line growth was better than estimates, led by chemicals, packaging, while margins marginally moderated. Revenue growth was around 44% YOY. Gross margins were up 160 basis YOY to 52.3%, while EBITDA margin expanded 60 basis YOY to 25.5%. Even PAT increased by 54% YOY. Talking about what will lead to the future price performance for the stock, continuous capex towards your specialty chemicals on the back of higher consumption of fluorocompounds. Even SRF has entered into fluorocompounds across agrochemicals and pharma, supports the business well. Venturing into PTFE, again, fluorochemicals through backward integration of R22. So R22 will act as raw material for your PTFE, diversifies the business risk going forward. And if you talk about some uh, your key pointers from your Q1 FY23 phone call, then the capacity utilization for refrigerant gases is strong at around 70 to 75%. A sudden drop in raw material prices is likely to impact margins in Q2 FY23, but this drop is expected to be beneficial in the H2 FY23 going forward. Agrochemicals, the target of 20% margin is still likely on track. The capex is on the major capex is planned by the company still remains on track, and that's why if you look at it with a strong fundamental profile, the EPS is really great at 99, one of the topmost companies in terms of EPS rank. If you talk about the last three results as well, been growing consistently. The only problem is that the stock is yet to show some kind of price strength and accumulation up till now. The stock is still trading above its key moving averages, The RS line is kind of flattish at the moment if you look at it, but the stock is still 10% to pivot and 10% to its high. So going forward, it still has some room, some space of around 10%. And during this time, if your RS line starts trending higher, some accumulation happens, that is the volumes happen, then the stock can be uh, a good breakout candidate. Why we've been discussing this stock a little early is that it's good to keep good stocks on your radar for some time. So even one can study like how the price volume action happens during this right-hand side of the base, and whether the stock is able to move higher on above average volumes or not, whether it is able to show accumulation, and at the end, whether it's able to break out on above average volumes or not. So thank you, and that's it from my side. And stay connected on this pre-well space as well, and the after hours space, that is the evening show at 4:30